Hey everybody, this is Lance, the option teacher. I'm going to do a video series on income ETFs, and I'm going to show each of the holdings that I currently have. We'll do one about every week or so, and I'm going to go over the strategy, how it actually sells covered calls, and more about the information on the fund. First one we're going to look at is TSPY. So how TSPY executes daily 0DTE covered calls, and an overview of the S&P Growth and Daily Income by me, the option teacher. So if you want to look this up, it's the ticker symbol TSPY. This is directly from the website. Primary objective is current income while maintaining prospects for capital appreciation. And the secondary objective is exposure to the performance of S&P, subject to a limit on potential investment gains. It's a relatively new fund, came out a little over a year ago in 2024. It does have an expense fee of 0.68%, which is a little bit on the high end. For regular non-covered call funds, this would be pretty high. For the covered call ETF funds, it's reasonable. It's kind of in the middle of the range between some of the yield max funds and some of the JP Morgan, Goldman Sachs funds. Directly from the website says, by writing covered call options each trading day that expire the same day, TSPY seeks to capitalize on the rapid time decay inherent to 0DTE option positions. It also says, the daily expiration of the options minimizes prolonged market exposure, seeking to reduce unfavorable shifts in the underlying security. So having the 0DTE does help with not necessarily running up too long. Like if you're in a 30-day like SPYI and SPY happens to shoot up, it could be tough for it because you're going to be locking in the gains of whatever your sold call is. But doing the 0DTE, it's going to be more manageable in terms of either rolling it or not necessarily losing a lot of those losses if it goes for much higher than it should be. So therefore, the strategy is akin to a covered call style. Holding SPY, it actually holds it with index options, which is better for taxes. And it also writes covered calls against it, but compressed into extremely short-term expirations, like 0 days expiration or the same day. This means a huge emphasis on the time decay. If you sell a 0DT every day and compare it to a monthly, then assuming the same delta, then it's going to be a little bit more premium on the 0DTE just because you're getting that rapid time decay every day. When you sell a 30DTE, for instance, it's going to be a bit lower because in the first few weeks or so, you're not going to get as much time decay. And then when you get closer to expiration, it's a bigger theta decay. The fund holds almost 100% of its assets in SPY, 99.88%. Very small cash position. Might be used for rolling. They do occasionally have to roll out or up and out some contracts. Portfolio manager writes covered call options on the underlying. They collect premium from the option buyers. It does limit your upside. All these income ETFs will limit your upside because you're selling a covered call. If it goes above this strike, you're not going to get the gains from it. You can't have your cake and eat it too. It does expose the fund to downside risk in SPY though. So even though you're selling covered calls every day, if SPY drops a lot, it's not going to necessarily be a good fund in the end. However, it does reduce your time risk because you have your 0DTE. It removes multiple day exposure. There's no overnight risk. So let's say some big news happens and the market shoots up overnight in the futures. They can take advantage of this because they don't typically sell a covered call that holds into overnight. Specific risks though, if SPY moves sharply upward, your upside is capped because of that written call. So let's say SPY is at 6,500 and it sells a 6,550 call. If it goes above 6,550, they won't be getting any of the extra gains from it. unless they're managing or rolling it, which they do at times. If the underlying moves sharply downward, the fund still bears that downside. So if SPY is at 6,500 and then over a few months goes down to 6,000, you're going to have those losses. It will be mitigated a little bit from the covered calls, but not completely. It could generate substantial taxable events, and the site states that distributions may exceed the earnings gains and may include a return of capital, which I've seen happen, where it typically does return most of your capital. For tax purposes, that's usually pretty good. If you do this in a Roth IRA like I have it, you don't really have to worry about the taxes. But in a regular brokerage account, return of capital could be beneficial at first because you're not going to necessarily have to pay tax on that until you sell the shares, and then it lowers your cost basis. Because the fund is relatively new and the track record is limited, market behavior is uncertain. Distribution rate is pretty healthy at 14.35%. It's pretty much in the range of most incoming ETFs, maybe slightly higher. There are some other funds that have much higher distribution rates, but they might be paying you back with essentially your own money. 14.35 is a little bit on the high end for me as well, where I think it's reasonable to have around 8 to 12% or so. However, I am going to be dripping the shares and buying more shares with the monthly dividend. 12-month trailing is 13.75. So again, it's a good rate. The actual TSPY won't necessarily go up as much as SPY because of this. You'll typically be able to enter in at a lower price right after the ex-div date where they give out the distribution. This fund may appeal to investors who want exposure to S&P, plus an overlay of daily premium collection. It does have a higher income yield, 14%, relative to typical passive equity funds, and it aims to minimize time risk with the daily expirations. If you look at the website for it, if you go to TappAlphafunds.com, they have TSPY and TDAC. I'll do a different video on TDAC as well. So if you look at the distributions, they're very consistently paying about 0.3, 0.29, 0.28. So anywhere from like 0.27 to 0.3. And currently, TSPY is at 25.25. That's how you get around your 14% distribution. What's interesting is they will show what they actually do every day, typically around 9:15, 9:30 Central. Right now I'm doing this in the weekend. You won't see it, but you can click on holdings. Oop. All right, here for the 10th, they had S&P, number of shares of price, and then option. So the way to read this is look at these four numbers, 67.15. That was the 0DT they sold for 11.10. So you'll see this typically in the middle of the day where you'll have the holdings, but you'll also be able to see the intraday where they actually show every day what they're selling. If you refresh it, you can actually see how they manage it as well. Sometimes they buy them back. Sometimes they will just let them expire. Other times they'll buy them back and then do a second 0DTE at times. And it's a good fund. I have about 0.5% of my total Roth IRA in TSPY. I'm looking into adding more funds to it as I get older. We get to have a good amount of the income for retirement, so I could just drip the shares right now, accumulate a lot of shares, and then when I retire, it'll be able to have a good income stream. So again, Lance, the option sheets are here. If you have any questions, let me know. Comment down below, and I'll see you guys on the next video.